The Big Beautiful Bill Tax Changes 2025. What they mean for your taxes, business, and retirement. Why this bill deserves your attention. Let's face it, tax law rarely makes headlines in a way that actually matters to everyday people. But this time, it's different. On July 4th, 2025, Congress passed H.R. 1, also known as the One Big Beautiful Bill Act, with sweeping bipartisan attention and a big push from President Donald Trump. Now, whether you're a small business owner, a high-income W-2 earner, a retiree, or someone working overtime just to keep up, this bill will affect your wallet, your benefits, and your long-term financial planning. Let's break it all down in plain English, starting with what the bill actually is. What is the Big Beautiful Bill? This isn't just another tax tweak buried in budget footnotes. It's a fundamental reshaping of the U.S. tax code, safety net programs, and spending priorities for the next decade. It's the most consequential tax bill since 2017, said Erica York, senior economist at the Tax Foundation. But the long-term fiscal effects are still unclear. With that in mind, let's dive into the core tax changes and what they mean for you. The major tax law changes, what you need to know. To start, the bill locks in some familiar provisions while adding new twists for workers, families, and retirees. Today, personal tax rates stay lower. No changes to brackets. If you're earning under $400K, the Trump-era TCJA cuts are now permanent. That's continued relief for millions of middle and high-income earners. 0% tax on tips and overtime. This one's big for essential workers. If you're a nurse picking up extra shifts or an EMT working overtime, that additional income is now federally tax-free through 2028. That's real money back in your pocket. Without adjusting your base salary, the child tax credit bump. Parents can now breathe a little easier. The child tax credit is now $2,200 and will adjust automatically for inflation going forward. This ensures the credit won't lose value over time, helping families better keep up with rising costs. Another big change, Social Security is now tax-free, thanks to a new $6,000 senior deduction. Most retirees will no longer owe federal income tax on their Social Security benefits. If you're retired and living off modest savings and benefits, that could mean thousands in tax savings each year. Let's talk SALT and why it's a big deal in 2025. For years, residents of high-tax states like New York and California have struggled under the $10,000 cap on the SALT deduction. That's now temporarily lifted. The new cap for 2025 is $40,000. This phases out at a $500K AGI, but remember, this cap reverts to $10,000 in 2030. For example, an NYPD officer earning $200K with $30K in state and property taxes can now deduct that full $30K, a big improvement over the old cap. While it's a win for now, keep in mind this one's temporary, so planning around it matters. The small business and self-employed provisions. Now let's shift gears. If you're self-employed, run a small business, or operate an LLC, these next few changes are worth real dollars. The 23% QBI deduction, the qualified business income deduction, has been increased from 20% to 23%, giving business owners a slightly bigger tax break on net profits. 100% expensing returns. Thinking of upgrading your office tech, buying equipment, or investing in a work vehicle? You can now fully expense it in year one again. No more waiting to depreciate it over time. The qualified small business stock overhaul. If you're a startup founder or angel investor, the qualified small business stock exemption thresholds have been raised, meaning bigger chunks of capital gains can be excluded from taxes. Want to make sure you're getting every deduction possible? Read how clean books can save you thousands in deductions. Social Security and senior benefits provision. For those aged 65 plus, this bill includes several meaningful changes beyond just Social Security tax relief. A new $6,000 senior deduction with zero federal tax on most benefit income, and more breathing room for low to middle income retirees. If you're planning retirement, learn why most retirement portfolios are tax time bombs and what you can do now to protect yours. Let's talk about Medicaid, SNAP, and health program changes. This next part hits close to home for many in public service. If you're supporting elderly parents or are receiving SNAP or Medicaid benefits, expect more eligibility reviews and work requirements. Adults ages 19 to 64 must now work, volunteer, or train to stay eligible. States with high error rates in SNAP processing may have to repay federal funds. These changes especially affect caregivers, part-time workers, and low-income families. Nurses, EMTs, FDNY, and NYPD workers supporting family? These policy shifts are worth watching closely. Clean energy rollbacks. Know the expiration dates if you've invested in clean energy or plan to. The window for claiming federal credits is closing fast. New EV credit ends September 2025. Used EVs are eligible through June 2026. Solar and wind credits are being phased out ahead of schedule. This rollback is expected to slow new green installations, particularly among middle-income households. If you're considering energy upgrades, now is the time to speak with a tax professional. Let's cover student loans and education reform. Education funding is getting a major overhaul, too. Grad loans capped at $20,500 per year. Lifetime limits now apply based on program. Grad Plus loans eliminated. Loan forgiveness extended to 30 years. Parents saving for college? Now's a good time to review your 529 strategies and education tax credits. What about border security? Defense and immigration. While not tax-related directly, budget shifts in this bill include $150 billion to defense, $45 billion to ICE and immigration enforcement, new fees for asylum and visa applicants, expanded border technology and staffing. These investments reflect a growing federal focus on national security and migration control, which may impact labor markets and regional economies. What does this mean for future money trends? Here's the catch. While this bill cuts taxes today, it increases the federal deficit by over $4 trillion by 2035, according to the Congressional Budget Office. That means taxes are almost certain to go up again in the near future, especially after key provisions sunset in 2028 and 2030. Which brings us to the most important takeaway. Now is the time to shift to tax-free income. If we know higher taxes are coming, the smartest move is to shift more of your money into tax-free or tax-efficient strategies now. Some examples that can help you capitalize. 1. Roth conversions. Pay tax at today's lower rate. 2. Cash value life insurance. Tax-free growth and borrowing. 3. Municipal bonds, tax-exempt interest. 4. Fixed indexed annuities, tax-deferred growth with protection. Curious how these compare? Read our blog, Why Strategy Determines How Long Your Retirement Money Lasts. What you should do next. Whether you're a business owner, a nurse, a retiree, or simply earning a high W-2 income, this bill creates opportunity, but only for those who plan ahead. Lower taxes now will result in higher taxes coming later. Smart planning bridges the gap. Let's build your tax-smart 2025 plan now at planwithvince.com. Now, let's recap and address commonly asked questions. So, is Social Security income really tax-free now? Yes, the new senior deduction eliminates taxes on most Social Security benefits for eligible retirees. What happened to the SALT deduction? It's temporarily increased to $40,000 through 2029. With a phase-out starting at $500K AGI. What's the QBI deduction for business owners now? It's now 23% of net income for qualifying self-employed individuals and pass-through entities. Are any energy credits still available? Yes, biofuels and some rural renewable credits remain. EV and solar credits phase out by late 2025-2026. Should I shift to Roth or tax-free strategies now? Yes, with future tax hikes likely, locking in today's lower rates could save you significantly in the long run. What this bill really means: the Big Beautiful Bill offers powerful short-term tax relief, but it also sets the stage for major long-term fiscal challenges, including the strong likelihood of higher taxes by the 2030s. Your strategy can't just focus on today. It must prepare for what's coming next. If you're a small business owner, a high-earning W-2 employee, a retiree with pre-tax savings, a public service worker supporting loved ones, now is the time to rebalance your portfolio and plan for tax-free growth before the window closes. Protect your future. Let's build your custom strategy at planwithvince.com. Laws like the Big Beautiful Bill don't just change the rules, they rewrite the playbook. And more changes are coming. If you want to stay one step ahead of tax hikes, press ahead with Vince. Benefit updates and smart financial strategies tailored for small business owners, retirees, healthcare workers, and high earners. Make sure you're subscribed. We break down the complex, cut through the noise, and deliver clear, timely updates right to your inbox. Stay informed, save more, and protect your financial future with Plan with Vince.